Okay, folks, we are looking at the greenback, the US dollar monthly chart, and I wanted to draw attention to this level in here. See how we have an old high in here, and I'm roughly close to this low in here, but very clearly you can see this major low here, and we had just recently penetrated this low in here and presently trading at current levels here. Okay, again, this is a monthly chart, but I'm going to draw your attention to how we can still use our Pro Traders Club entry technique that we've been using for months now, the optimal trade entry. Okay, and here is your 79% retracement level, or your lowest pullback in an uptrend or a bias for longs. And here's your 62% retracement level. And anywhere between these two levels would be an ideal, or what we like to refer to a optimal trade entry. Okay, so we had 1, 2, 3, 4, and if you want to call this one here 5, basically good months to get long on a swing trade. Okay, looking for a possible push to the upper band of the swing here. Notice the bodies of the candles in here. Okay, let's denote those there. Okay, notice that we had difficulty getting above that. Now, counting the wick, okay, that's one thing. But if we draw the fib on these highs here, okay, we get the very low on these candles, and we have 1, 2, 3, 4, 5 candles still giving you an optimal trade entry. Okay, so this is what I was referring to in previous videos by using the bodies of the candle and disregarding the wicks. Okay, you can get the true price level that market makers and institutions and banks are all monitoring. If you go to the right of the chart, you'll see that it's basically 88 figure on the dollar. Now, using this as a swing trade or position trading setup, we had an optimal trade entry on this swing here. It pulled back, and buying anywhere in this vicinity here, looking for a pull back up to these levels in here, offered a multitude of buying opportunities for pairs that are paired with like the dollar, like for instance the Canadian dollar, Australian dollar, not Australian dollar, I'm sorry, New Zealand dollar, the Kiwi, and vice versa. Since we are seeing a buy set up in here, this was the catalyst that set up all of the shorts on our Eurozone pairs, cable and the fiber. Now go back to your charts and you'll see that that's how this provided a means for extrapolated moves to the downside on those pairs. Now we are recently trading in this vicinity here, back below these lows as well. Now this red line in here, let's take this one off now because we're no longer going to use it for this explanation. And we'll take the fib off for a moment, and we'll come back to that in a second, should we need to. And we don't need that rectangle. Okay, let's zoom out just a little bit. Okay, this high here, this low here, so that is a key support resistance level. Okay, now in this vicinity here, let's start drilling down to a weekly chart. Okay, now if you've been monitoring my analysis concepts and techniques over the past few months, we should clearly see a pattern that is presently unfolding on the weekly chart. At this key support line, price has traded down, bounced, pulled back. What do you think this is? Dollar fib from the low to the high, 79%, 62%. Optimal trade entry. Okay? Now this is a weekly chart, guys. This is not a 5-minute chart. Suggesting bullish prices in here, even if we were to get back to this old high. Okay? Or if we use the candle bodies in here, okay, looking at the 76 figure as a possible means of upside objective, that would be a few hundred pips in here, a couple hundred pips. Let's drill down to a daily chart. Okay, and now we can go back to fine-tuning our optimal trade entry. The low to the high, pull back at a key support level that we've already determined on the higher time frames. Okay, buying in anywhere in this vicinity here. Looking for the 165.20 level in here, which is institutional level. Okay, let's take this off for a moment and let's drill down to a 1-hour chart. And let's zoom out a little bit. Okay. Price makes it a low here, lower low, higher low. See how market structure has now shifted to buying. Then we have a bull flag. Price finds support at what level? That old key long-term support line. Notice how I kept it on the chart, and it has provided us a means of entry of now a bullish market structure for the dollar. See this low in here? Right at the bottom or base of the bull flag formation in here. Price rallies up, pulls back. What do you think this is right there? Hopefully, over the past few months, you have trained your eye to see these patterns. Optimal trade entry right on a long-term key support level. Okay, even if we only get to this level here, we have a very good range for possible pips. Okay, and this high here, this low here. Let's drop a line on that so you can see what we're looking at. Okay, you can clearly see there's our bounce off of that level, bouncing up into what we have now as another bull flag. So you can see how the market makers have been using these levels, and you can now see why we have seen weakness in the fiber and cable. A few weeks ago, I was suggesting folks to basically follow their daily charts on the higher time frames, looking for really strong setups. And I suggested to everyone that the fiber and cable may be setting up a daily optimal trade entry for a short. Okay, before we look at those two pairs, let's drill down. Okay, and you can see how this has swung to bullish. Okay, and there was our nice position trade or swing trade entry here. But how did we nail down the low? Remember, I was teaching that it's possible to see a low form on the lower time frames. you should already be able to see it here. This low, this swing here, pulled back, there's your optimal trade entry. So we're going to drill down to that. There is your low to high optimal trade entry on a 5-minute chart. Okay, and we are also in what time of day? Right there is your London Open. Okay, so that's how smart money could key in on a ultra short, long position and control risk very tight. And we will zoom out. Okay, and you can see how that swing here, lower, higher microstructure swung to bullish. Nice price swing up in here and pull back. Let's go to a 15-minute chart and you'll see those swings a little bit more clearer. Okay, so we can now start pulling our fibs on swings, looking for trend trades. Okay, and here's a 62% retracement level. Okay, and let's just for completeness sake, let's just throw some fibs on. Okay, and we have a mid pivot level in here using GMT pivots for that day. And if we change it to New York, okay, previous day's central pivot right on this level one here, and the low for that day happened to be 163.65, and the previous day's central pivot very close in terms of pips for that. So you can see how price has moved up precipitously, made another bull flag, and pushed higher. And for you pure chartists, I'm sure you probably have already said this to yourselves looking at it. This is an inverted head and shoulders pattern. Whenever these two highs in here are penetrated here, a reasonable objective would be to take. Now what I'm doing is I'm not going to draw a line, but I can just eyeball and see that this is the neckline here. So you find that point, draw down to the lowest point in here, which would be the head. It's 50 pips. Okay, so if we take that same approximation in here, move up 50 pips. Okay, and you can see essentially that's where we made this consolidation in here. Okay, 50 pips above that neckline. And if you look at the chart patterns on any technical website, you can see the basic premise behind head and shoulders. So that's the rundown on the dollar index. Okay, and we are presently looking at a optimal trade entry at key support. Higher dollar suggests softer foreign currencies. Okay, and one way we can do this top-down analysis would be to take a look at the weakest pairs Okay, and one way we can do that is looking at higher highs, because basically, if the dollar is going up, foreign currency should be going down. But before that changes, the trend prior to that would have been dollar being down and foreign currency going up. So if we're looking for the weakest in foreign currencies, we would compare highs. Okay, so here is the euro or fiber daily chart. Notice that we had a nice drop down. Okay, and then we had a run up. This was the move that I was telling you in chat to look for. And if you take the high, draw it down to the low, just like our script in a well-known movie. It always unfolds the same way all the time. Here's your sweet spot. Okay, going into the market looking for shorts in this proximity, and we had a breakdown. Even if we get to this low here, we have several hundred pips, and can't go wrong catching any of that. Here is the cable. Let's look at the daily chart for the cable. Zoom in a little bit. Okay, here's our run up recently. We've been trading down. Take our high here. This red line is a key resistance level I have on the higher time frames. This happened to be a reason to look for a short, which was also coinciding with the same time in price theory that the dollar was finding key support. We have a key resistance on cable. At the same time, the dollar index was finding a major long-term key support level. And here is our sweet spot for the optimal trading sheet on the daily chart of the cable. And we have since dropped a few hundred pips as well. So if we get down to this low as a retest, okay, as swing trade unfolds going down, that is again several hundred pips to the profit. Now let's look at a 1 hour chart on the cable. Okay. Right in here is a 50% retracement level on that fib. Remember, we were just looking at a daily chart. All I did was drill down to an hour chart, leaving that fib on here. So now what we're going to do is we're going to see this most recent breakdown here, this low, pull back. What do you suspect this is going to be? Well, you take this high here, pull it down to the low. Here's our 79% retracement level, our 62% retracement level. Optimal trade entry in here. Stabbed, get a little wiki in here, a lot of little tails and stuff. So now this is one area where we would be looking for high probability shorts. And if your eye's been trained well enough, you should be able to see the optimal trade entry that's residing in this fractal. This high here, down to this low here, pull back up here. Okay, so let's take a look at that. Now I apologize, this is probably going to get a little busy on the chart, but I want you to see how this is overlapping or converging fib trading. Okay, we're going to go down to a 15-minute chart. And we will look for, but this is the swing we are looking at for this example. And there's your sweet spot. Okay, so we have daily, hourly, 15-minute chart, all giving you your high at the sweet spot on the optimal trade entry. And since then, we have fallen off the table. Come on, I'm recording. It's over 240 pips on a swing, and that, my friends, is how we break a market down top down and look for opportunities to get long or short based on market structure and even our optimal trend entries unfolding on monthly, weekly, and daily charts. That's how you use your ultimate Pro Traders tools, and then you'll see that these long-term moves can be ferreted out, even though they don't set up that much in terms of frequency. They are very, very, very profitable. Okay, traders, this is the ICT Pro Traders Tip of the Week, first edition actually. We are looking at a concept I call double tap. And if you are a fan of action movies or military buff or firearms buff, like I personally consider myself, there is a um, kill shot that's referred to as a double tap. Usually, generally, it's one to the head, one to the chest, or one to the chest, one to the head, vice versa. And I just came up with this title simply because it's an easy way of taking kill shots from the market at your kill zones. Okay, so we have a 500 GMT time, which is essentially midnight in New York. Okay, market trades up, makes a high, falls off precipitously, then starts to bounce right in the London Open time frame. Okay, so what we'll do is we'll draw a fib from the high to that low. Again, we are looking at a 5-minute chart on the fiber. Okay, so we are trading down and then back up right into optimal trade entry to get short. Now, the premise behind double tap is, number one, you want to bank a specific number of pips and then let another portion of your trade run. Now, I know there has been videos in the past that I've produced and shared with everyone on the internet that my way of scaling out trades, I'll take a certain percentage off, and then at another higher level in terms of targets, I'll scale off another percentage and I'll leave certain amounts. And the question has come up by some traders by means of email and by the thread and the blog. They're having some difficulties with understanding where to scale out, how much to scale out. One individual has expressed a confusion as to how he can overcome a limitation in terms of his leverage and lot sizes with his current broker. So this was something I was going to introduce during the London close teaching, and you'll see it resurface there as well. But for now, I felt this was an opportune time to share this. And again, it's the double tap. So basically, you get the entry pattern like any other trade. Okay, from where you enter, and first objective here. Okay, should be approximately 20 pips ideally. And for you guys that like to hunt 20 pip trades every single day, not that I advise it, but this is one way you can do it and still try to capture a lion's portion of the move. So here's what we'll do. Make it real simple. You're going to buy you're going to sell short based on your money management rules. So if we're going to get short here, we're going to say basically we're going to short it at 146.70, a round number, real easy. Okay, and risk is above this high here. So essentially your stop would be in this vicinity, and your entry would be in this vicinity. In terms of pips risk, okay, we are looking at essentially 22 rounded to 25 pips risk. Okay, now what we'll do is, using this objective down here, we will take and measure that. Okay, and it's almost 30 pips, so a little better than 1-to-1 risk to reward ratio. So it's very minimal in terms of what you want to look for. Okay, now what you'll do is you will use your money management rules for your current equity, and because everybody has a different amount of money in their trading account, basically we're going to say we're going to risk no more than 1%, okay, in terms of risk on 25 pips. So whatever you take your equity, times it by 1%, and then divide that by 25 pips. Okay, that'll give you your maximum position size. Okay, then you basically divide that in half. Okay, so that would be one position. Okay, together those number of lots would be considered 2 positions. And for instance, let's just assume that it works out that you have the equivalent of 2 mini lots. Okay, so you would sell short 2 mini lots here. Okay, and you'll take first objective here. You're just going to scale off one of them, or half of your position, and you'll leave the remaining portion to try to capture the remaining portion of the daily move. Okay, or whatever that session is, whether it be New York, London close, or whatever. Okay, so in summary, in very basic terms, what you're going to do is you're going to basically assume whatever trade you're trying to take, and it's going to be assumed in 2 lots or 2 portions, and you're going to take off half at 20 pips, or first objective of your optimal trade entry pattern, and you'll leave the other remaining portion. You'll drop your entry from here, you drop your protective stop down to break even. So basically you've already locked in 20 pips. Okay, and then hopefully you'll get another additional slide, and this is where you use your swing projection. Okay, and here's your 262 extension down here, and you could really hold on and try to reach for these objectives in here, which would be essentially the closing period of around the same time the previous videos I've suggested you guys watch for the closing portion of New York time. Okay, so double tap is basically assuming your trade in the form of 2 trades, making up one position 50% and the other second portion of it, the other 50%. You're just going to scale off 50% of your trade at first objective, hopefully at 20 pips, and then breaking the second portion down to break even, risking no more or any of the 20 pips you already locked in, and then let your position run to your ultimate price objective. Okay, and you would reverse this for buying too. Okay, so double tap is basically putting on a trade, taking half off at first objective or 20 pips, moving to break even on your remaining 50%, and then taking hopefully your ultimate swing projection or session objective. And that second objective could be another pivot level, it could be a figure, it could be a half figure, a small institutional level that you were reaching for, or previous day's highs or lows, or weekly highs or lows, or monthly highs or lows. Look at all of the support resistance levels that are mentioned in the video on key support resistance, and you can use those levels as possible objectives while you're in the trade trying to unload the second portion. Okay, so hopefully this will address those that have issues with how much should I scale off, how do I accomplish this trade. As long as you can assume 2 lots, whether they mini or micro or standard. um, I'd rather you guys not trade a standard account, because they lock you in terms of how much you can manage your leverage and all that. I still trade minis because it's very lucrative for me. It allows me to control my risk much more effectively, and I don't force myself to have to always use a standard lot in terms of my lot size, buying in and selling. So again, that's double tap. Basically, take your trade and split it in two. Scale off at 20 pips or first objective, break even on the remaining portion, and reach for your objectives. So at best, you'll always get your 20 pips if you're not stopped out of the trade initially. And you just do this over and over again, build confidence, and hopefully this will be one for you guys to run with. And I'd like to see those that have struggled with the scaling out or lot size, profit taking, exercise this in the thread, and then let's see where it takes you. And with that, guys, I wish you good luck and good trading.